Hello guys, my name's Luke and welcome to part 2 of this video series where we analyse Bitcoin's price journey on its way to at least $1 million per coin. Now if you haven't seen part 1, go and check it out. We talk about why and how the global financial system is currently crumbling under the $300 trillion of global debt. We also discuss Bitcoin's potential role in this financial system reset, and we also touched on and explained the Bitcoin mining process and how it triggers each of those beautiful 3-year bull markets you're looking at above me right now. Now, here in part 2, we're going to analyze why Bitcoin is a better form of money than gold, which has been the best form of money for the previous 7,000 years. And we'll also be doing a lot of technical analysis on that Bitcoin chart you're looking at above us to get an idea of where we're headed for the next 3-year bull market. I hope you enjoy part 2. Stay tuned for part 3. We've got some real crackers coming. All we need to know for today's video is the Bitcoin halving ensures that there will only ever be 21 million Bitcoins ever created. And at the moment, we've already mined around 17 million of these Bitcoins, okay? So this absolutely limited supply is like honestly a revolutionary invention, guys, when it comes to money, because we've never had a form of money that's absolutely scarce, okay? So gold has been the best form of money that we've used, okay, for the previous 3,000 years, and it's even been used for up in some cases for around 7 to 8,000 years because it's relatively scarce and rare in the ground, okay? So we've only ever mined, it's 190,000 metric tons of gold in human history, guys. And that rarity and that scarcity is the reason it's been the best form of money for the previous 7,000 years, because you can't add a whole lot of new gold onto the existing stockpile, which makes it a great store of value, which is one of the most important functions that a money must have. It must be a store of value and a medium of exchange. And we're going to go into, we've got a beginner's guide of what money is coming up, where we go into great detail of gold, silver, and how the current money we've been using for the previous 50 years is not a great store of value, because they can just print it out of thin air, devaluing your savings or devaluing the purchasing power of the money or anyone who holds that money. So just while we're on the topic of monies having a limited supply and their absolute importance for people, I just thought I'd jump in here and really ram that point home, because I've got a 600-year chart that we're looking at the moment. This is a chart of the gold price in British pounds, which is the best performing fiat currency of all time, having survived 300 years and only lost 99.5% of its total value. That's right, guys. All fiat currencies go to their intrinsic value of 0. But as you can see here, for 600 years, the price of gold in UK, in the British pound, was relatively stable when we were on gold-backed money. And then all of a sudden in 1971, look at things go exponential. That is because governments gained control of the money supply in 1971, giving them the ability to print money out of thin air and create these massive debt-fueled asset bubbles in the housing and stock markets. And while we're on the topic of what happened in 1971, I've got a huge video coming up where we go through this amazing website, WTF Happened in 1971, which highlights all the very strange coincidences that seemed to start occurring in 1971, where the money was changed, okay, guys? That's when the central banks and big governments gained total control of the money supply and turning every currency into a fiat currency. And in doing so, they were able to blow up these huge housing and stock market bubbles that we were previously talking about in part 1. And also, coincidence or not, but ever since 1971, the top 1% seem to be getting richer and richer, while the everyday person like you and I, we seem to be getting poorer and poorer. Has anyone noticed the skyrocketing prices of rent, food in the past 20 years, while your wages haven't budged? That's all got to do with central banks and big governments changing the money, and for the first time in 7,000 years, placing every single country around the world onto a fiat currency backed by nothing, not gold, not anything. But while we're on the importance of money and a money that has a finite supply, let's get back into the Bitcoin mining and compare it to the gold mining. So here's another visualization of gold, all the gold that we've ever mined above ground here. So that is the top cube. And then it's estimated there's another 50 or so thousand tons of gold still in the ground. And at the moment, we're actually mining around 2 to 3,000 metric tons per year of gold, which is an annual inflation rate of around 1 to 2%. When you compare that to the annual inflation or the growth rate of the fiat currency, it's over 10% per year. They're adding 10% of the paper money per year to the existing stockpile, which devalues your currency that you hold by 10% at least every year. This year, they've added over 20% of money to the global money supply. Gold, you can only add 1 to 2%, so it has a much better stock to flow ratio because the amount of new gold or flow that you can add to the existing stockpiles of gold is very low, making it a great store of value. But Bitcoin takes it to an even greater level. We've never ever had a hard cap supply. There's only ever going to be 21 million Bitcoins ever created, okay? But you could always find a little bit more gold each year. This 50,000 estimate could always change, and you never know. Elon Musk might get up on those asteroids and start mining the gold out of the asteroids because there is a lot of gold in the asteroids in the atmosphere. 50 or 100 years down the road, we could be seeing that. Technology is advancing so fast. Elon's already put a Neuralink computer chip into the brain of a pig. That came out today. But anyway, we'll analyze the Bitcoin halving in much more detail in the video I've got coming up, okay, where we cover what is Bitcoin. And we will go all the way down the Bitcoin rabbit hole, the miners, and all of that. But for the purpose of today's video, keeping it relatively short, that's all we need to know for the halving, okay? Every 4 years, the block reward or the amount of Bitcoins paid to the Bitcoin miners gets cut in half, all right? Every 4 years that occurs. So when we analyze each of these bull runs in a little more detail individually, we can see a pattern occurring. After we have one of these large 80% corrections or bear markets, we enter a little bit of a consolidation structure. So that's signified by these triangles here, guys. After we've had a large 80% correction, we consolidate within a triangle structure where all the retail speculators get flushed out and the only buyers of Bitcoin at this stage are the miners or the really smart institutional investors, or the smart money as we call them. Okay, they're the ones buying the bottoms. They're the smart investors. Okay. So that's what we want to be. We don't want to be one of the retail speculators buying at the very top. Okay, that's why I'm making my channel. So we actually make money in investing. Okay, so we generally break out of these triangle structures around the Bitcoin halving. In 2012, we kind of entered the next bull run 2 months after the Bitcoin halving when we broke out of that triangle structure. In 2016, we broke out of that structure just a couple of months before the halving, as people actually front run the halving. They knew that the cut in new supply coming onto the network was coming, so they kind of anticipated it, okay? And then same again here in 2020, we've just had our halving in May, and we've just peeped our heads above this little triangle structure here, guys, and we zoom in a little bit more, you can see that I think we've just entered the next 3-year bull market, just when we've recently broken out of this consolidation range, okay? All right, guys, so Bitcoin's price behavior around each of the supply halvings every 4 years comes down to simple supply and demand economics. If the demand for Bitcoin remains the same, meaning the same amount of people are transacting Bitcoin or the same amount of people are investing into the Bitcoin asset class, just as the supply in new Bitcoins coming onto the network gets cut in half, it's very simple. The price simply has to rise. It's mathematics, all right, guys? So let's have a look at how each of the supply halvings has impacted the Bitcoin price in the past. So after Bitcoin's creation in 2009, we got a massive 650x return in the Bitcoin price, where we rallied from 5 cents all the way up to $29.50 up here in 2011, 2012. And then we got the massive big 85% bear market where the price corrected 85%. And we built that next price floor in the Bitcoin price. We had our cycle low down here between the $2 and the $10 range of Bitcoin, where we consolidated for the next 6 to 12 months here in this continuation pattern, which is like it's a bull pennant, which I'll pop up on the screen at the moment. Okay, so we got a massive 650x return in the Bitcoin price after it was created in 2009, all the way up until our cycle peak here in June 2011. The Bitcoin price rallied from 5 cents all the way up to $29.50 and then we got that big 85% bear market correction, okay guys, where we corrected all the way down. We built our next cycle low or our cycle floor where the price of Bitcoin consolidated within that $2 to $10 range for a good 6 to 12 months. All right, and then in 2012 we're looking at the Bitcoin halving. All right, so then in 2012 when the Bitcoin block reward paid to the miners was cut in half from 50 Bitcoins all the way down to 25 Bitcoins every 10 minutes. Okay, guys, so the block reward that was coming onto the Bitcoin network was cut in half every 10 minutes. So the supply was cut in half, and naturally the demand for Bitcoin remained the same, and we broke out of the bull pennant continuation structure here, and it sparked our next 3-year bull run where we rallied all the way from our cycle low of $2.05 all the way up to our cycle high of $11,050 odd dollars in 2014. So that was our next 3-year bull market. All right, guys. And then after that huge 550x return on investment for the 3-year bull run, we had our big natural 80% price crash from $1,100 all the way to $160 here in 2015, where we built that next price floor for the Bitcoin price around that $150 to $400 range. That's where the miners and the smart money start to come in, and they see that the Bitcoin price got a little bit overextended from its long-term logarithmic growth chart, which I'll pop up on the screen now for you guys. Every 3-year bull market, it gets a little bit extended towards the exponential peaks in each of the 3-year bull runs. So after the 2014-2015 brutal bear market, after the famous Mt. Gox exchange was hacked, we actually broke out of this bull pennant, this continuation pattern before the halving. You can see here, guys, this time the investors and the smart money actually front run the halving, meaning they were anticipating the cut in the Bitcoin supply. Now, this time the Bitcoin block reward was again halved. It was halved from 25 Bitcoins every 10 minutes all the way down to 12.5 Bitcoins every 10 minutes, paid to the miners who were securing the transactions on the Bitcoin network. So, of course, this cut in new supply, while the demand remained the same, initiated our next 3-year parabolic bull run. Now, this bull run gave us 125x returns on your investment, where we rallied from a cycle low of $160 all the way down here in 2015, all the way up to our cycle high in 2017, where we peaked at around 20,000 US dollars, guys. So that gave us 125x returns, and naturally, after our 3-year bull run, we had another large correction. This time it was 80%, where the Bitcoin price supposedly crashed all the way from $20,000 to our cycle low here in December of 2018, around that 3,100 US dollar range. So now this brings us to where we are today, guys. Here in 2020, we've just had our Bitcoin supply halving cut in half, down from 12.5 Bitcoins every 10 minutes, cut all the way down to 6.25 Bitcoins every 10 minutes coming onto the Bitcoin network. So that means every day there is only 900 Bitcoins rewarded to the miners every day. So that brings us to, at the moment, I think we've mined around 17 million of the total 21 million Bitcoins that will ever be mined and created. All right. So we just had our cutting new supply coming onto the network. And as we can see, the Bitcoin price is reacting just as we kind of anticipate, guys. We've just broken out of our bull pennant or our continuation structure. And we look as if we've just initiated the next 3-year bull run for Bitcoin. Now, we can see that there's a pattern in the Bitcoin price occurring. We know that each cycle low is higher than the last cycle low. And we know that after every big crash in the Bitcoin price, our cycle peaks are occurring higher and higher. So, just like any other normal market, Bitcoin moves in waves and cycles. So, because we know we have a basic idea of how these cycles generally occur under normal circumstances, we might have a way to kind of have a rough estimate of where our next cycle peak or where we think the Bitcoin price could move in this coming 3-year bull market. So, as generally the bull market's around 3 years in length, and after we break out of our bull pennant, after our large price correction, we generally see the peak around 2 years later. So, a peak 2 years after our break of the really important bull pennant structure here would put the peak in late 2021 or early 2022. And that would line up with our cycle low here occurring in December of 2018 at around 3,100 US dollars. So, and we know that another thing we've got to take into account with the cycles is each time we get what's called decaying price appreciation. So all that simply means is each cycle, you can see the slope of the trend line getting flatter here in the red arrows when Bitcoin was very young and the asset class was tiny. It was only a couple of $1 million market cap. The price rise was exponential, nearly up in a straight line. Okay, but as the asset class grows and more money goes into the Bitcoin market cap, it takes more and more money to move each cycle or to move the Bitcoin price. So each cycle your returns are less. So say in the first cycle you got 600x returns, in the second cycle 550x returns, and then in our third 3-year bull market we only got 125x returns on the Bitcoin price. So if we say have a bit of a conservative estimate, let's say this cycle around, instead of 125, let's say we get a 50x return, guys, on our cycle low of $3,100. A conservative estimate of a 50x price return puts the Bitcoin price at, well, around 150,000 US dollars, and for my Australian friends, that's well over 200,000 Australian dollars. Now stay tuned for part 3, guys, where we show just how conservative that $155,000 price forecast for the coming 3-year bull market is. Very, very conservative when we look at the entire global macro environment. As we touched on in part 1, Bitcoin has a big role to play in this global financial reset. As fiat currencies fail, as we enter a once in 100-year financial system transition. And that is why all the sound forms of money, such as gold, silver, and Bitcoin, are the best performing assets of 2019 and 2020 globally. We'll also be having a look at what a global currency reserve asset shift could mean as the US dollar loses its supremacy as the global reserve currency. We're going to look at what could happen to the Bitcoin price if it was to suck in all that $90 trillion worth of global money supply, if it were to take over the global reserve currency status. Hint for you guys, it's sending it well over 5 million per coin. We'll also take a more conservative approach and see what could happen to the Bitcoin price if it were to grow to a market cap size of gold, which is $10 trillion. Hint, that's a 50x on Bitcoin's current price. And how could I forget? We'll also be analysing the huge news that came out last week where the first publicly listed company, MicroStrategy, decided to come out and put $250 million into Bitcoin, which is over 21,000 Bitcoins or 0.1% of the total supply. And after MicroStrategy done that, another two companies followed their lead and done the same, placing 40% of their total assets into Bitcoin. We'll be analyzing just how many Bitcoins there are left out there for companies to do that. And just a little bit of housekeeping for this video. We are new on YouTube, so we've got to play the YouTube algorithms game. If you've learned anything today, hit the like, hit the subscribe button. It really helps the channel grow and to put this content in front of the eyes of more and more people. So stay safe, guys. Thank you very much. I'll see you in part 3.